Welcome everyone to HueFin News. Today is November 4, 2018. The home of the 2-minute price prediction, as well as giving you all the news according to the charts. And what we have for you today is an article written by MARKETWATCH. And before I get started, as always, I gotta give you the plug. Make sure you guys go ahead and subscribe to this channel if this is your first time watching this video, because what we're doing differently than a lot of other YouTube channels, even the media in it overall, is that we're comparing articles that we read along with the price charts to make sure that what we're reading, what we're seeing is actually going along with what is actually on the chart, because that is the true feelings of all the market participants in the space of the financial world. It's already listed on the chart. So if you understand what is going on the price charts, then definitely you can see and predict precisely what's going to happen in the future. Okay, now as you can tell by the thumbnail, we're talking about the stock market is issuing a major warning to all investors. We're going to talk about that once we go ahead and look at these other three charts and see what type of warning is being issued that we all need to take notice of. Now, this article though is titled "The Godfather of Chart Analysis Says Damage Done to the Stock Market is much worse than anyone is talking about." Now, it was written 2 days ago, or at least uploaded to this website 2 days ago. And this is the gentleman here, Ralph Acampora, is bearish on stocks. Now, why would they have it as a caption below his picture? I will never know. But nevertheless, I went ahead and highlighted some of the things that are bearish in tone that can definitely lean towards his sense of the market continuous movement to the downside, right? So Ralph Acampora says the stock market is in bad shape and it's worse than many on Wall Street investors appreciate. Now, he's considered the godfather of chart analysis. So I guess they're trying to place some credibility on what this gentleman has said, but we're going to look at the price charts to see if his credibility is actually on point. As another thing I highlighted for this particular article is that the S&P 500 has, well, literally all of the major averages has erased all of their gains for 2018. So that is a very negative statement to write in an article, that all of the gains that have been attributed for 2018 is gone. A lot of these other averages as well are falling into correction territory, usually characterized as a decline of at least 10% from a recent peak. So the market over the last couple of days, even last 2 weeks or so, have fallen at least 10%. And Ralph Acampora is telling us that it's going to take months to repair that recent loss of points that we've seen. From a technical perspective, the damage that has been done technically to the stock market is much worse than people are talking about. This is what he told MARKETWATCH in a phone interview on Tuesday. Okay, now if you guys understand the FANG stocks, we're talking about Facebook, Amazon, Netflix, and Google. These cortex of internet technology companies as the clearest sign that the worm has turned on the bull market, because all of these four stocks have seen a breakdown in price. And to him, Ralph, that is a clear sign that the market has turned from a bull market into a bear market. Out of those names, those four companies, they have shed a combined $120 billion in market value. And on top of that, Amazon became the most recent of that group to close in bear market territory, defined as a drop of at least 20% from a recent peak. Now, I don't understand who defines a correction into a bear market, but overall, the general consensus is that Amazon is the most recent company to fall into bear territory. And then Acampora continues to say that all the leadership companies are getting crushed. He believed that the entire stock market itself will go into a bear market. And we're going to talk about that once we look at the charts to see if in fact all of stocks will continue to move lower. And he said it's eerie similar to the stock market crash of 1987, when the Dow slid a historic 22.6% in one single day on October 19th of 1987. Honestly, he doesn't think that the low has been put in yet, and he still believes and maintains that we're going to go into a bear market. The next statement you guys can read, he speculates. So he's estimating or guessing that the market may not be healed until around the first quarter 2019. So is he expecting a pop to occur in the market sometime beginning half of 2019? It's probable. Once you look at the price chart, you'll be able to see that yes, we can see the indications of these stocks recovering and moving higher in price. Now, on the Wednesday, you can see that the Dow gained 241 points, but it still suffered its worst monthly decline in 7 years. 2011, we have not seen the Dow worse off in a monthly decline. And as well, you can see that the NASDAQ rose 144 points, but it is still worst monthly drop since 2008, 10 years. So definitely something is occurring on the horizon for a lot of the stocks within the financial industry. And Acapora isn't alone in his bearish view. There's another gentleman named Michael Wilson, Morgan Stanley's chief U.S. equity strategist, said he believes the market is undergoing a rolling bear market. He was among the first to spot fractures in the market's uptrend. Then, before we conclude this article, as always, they got to give you the other side of the story. And it goes on to tell you that, to be sure, other analysts believe the market is just simply returning to normal, and that there's nothing to be worried about, even though we have not seen this much volatility in the market for like the last 10 or 11 years. Tom McClellan, he's the publisher of the McClellan Market Report and another high-profile chart technician. He told MarketWatch that the current action that he is seeing is more of a function of seasonal volatility associated with October. Maybe more or less he's referring to earnings season, and not a more significant upending of a 10-year bull market. He views stocks as right now being oversold and says he remains bullish on the stock market outlook. So as always, you got varying opinions going on in the market. One saying that we're going to continue to move lower in price and is reminiscent of 1987 stock market crash, and then the other one saying this is just simply a correction, a minor correction, but he still remains bullish on the stock market. So the judge of these two opinions always lies on the price charts. So that's what we're going to look at today. Let's take a look at the Dow Jones Industrial Average right now. This is a monthly chart, and you can definitely tell here that over the last 2 years, the volume has definitely seen an increase, something that we have not seen in the market for 5 years. So obviously something is changing over this last year or so for the market, for the Dow Jones Industrial Average. And even with this increased volume, you can tell that we're not moving anywhere. We're still hovering around 24,000 all the way up to 27,000 points. And this last previous month definitely shows you that the market definitely is leaning more towards moving to the downside. The last previous 3 months, these 3 months here, the market has not seen any volume. It tells you that the interest to that bullish side is not there. Okay. Looking at it on the weekly chart, we have seen some massive volatility coming into a particular space. What I am seeing in the near term is, yes, we can move to the upside in the stock market. Okay. I'm not telling you that that's not going to occur. As a matter of fact, I'm looking for it to move higher, but maybe around that 25,815 point area, maybe 26,000 as a hold. But overall, the market is changing over from that bull market into one of at least consolidation, even to that bear market, as Ralph Acapora states in that MarketWatch article. Okay, for us to end Friday where we was up all the way up here to 25,600 points, to close below it definitely shows us that weakness is very apparent in this market. Okay, now one of the things you need to pay attention to as we continue to move on is the fact of this particular market to hold price above that line. If the market can hold price above this particular line, then obviously we are moving in a upward fashion, but we're more or less transitioning into a consolidation. Okay, and I'm not necessarily seeing a lot of strength in the Dow Jones Industrial Average to where we're going to continue to move higher. Like I mentioned, we can come up to around 25,815 points, maybe 26,000, but that's about it. I don't necessarily see a huge movement to the upside occurring in the Dow Jones Industrial Average. Now, there are some outliers, like the trade war being ended. We can see a massive increase in price to the upside, but that's not actually panned out just yet. So until we actually get that particular news, we got to stay the course of what the market has actually been giving us, and that is that continuation to the downside, or at best that consolidation. So now we're looking at the NASDAQ. This is the monthly chart for the NASDAQ, and this market is still weak. This last monthly bar for the NASDAQ, we have not, this is very climactic volume in this space for the NASDAQ. I don't see a lot of strength coming into the market for the NASDAQ neither. So I would definitely have to go with Akapora on his analysis of the market as well. We're definitely seeing a lot of weakness in this space. We might get another quick jump around the 7,200 point area in the NASDAQ, but not too much above that. I don't foresee that occurring according to this price chart neither. So I'm in agreement as well with Akapora that these stocks are definitely showing us huge indications of a bear market impending. This is a warning that the price chart is definitely giving us, and you can tell here even in the S&P 500 that the last months that we've been able to move to the upside, the volume has literally been depleted, and then we get this major indication of weakness in the market and the volume appears. So again, it shows you that this particular market is weak, and do not necessarily expect that bull market to return. Now, can we get some very quick gyrations to the upside? Yes, simply meaning that the S&P 500 can come all the way back up here to 2,800 points, and then I would be expecting us to more or less start that movement to the downside. So what we're going through right now for all of these market exchanges or these averages is consolidation. Okay, this is giving everyone the opportunity to evaluate their own positions to see if they need to get out the market, or will we continue to see some changes in tone to where the market's going to continue to move to the upside. But as of right now, Ralph Akapora is definitely in line with what the price charts are reading to us. We are entering a bear market. The market definitely is signaling some weakness into this space, and until we get some more indications of market strength, that is the analysis that we will have to go with as well. So Ralph Akapora, the charts that we just looked at, definitely shows us that the market is leaning towards moving to the downside. Tell us your opinion. What do you guys think? Do you see the market continue to move to the downside, or do you think this is just a false move, and that what's the gentleman's name, Tom McClellan, if he's actually right, do you think that he's right than Ralph Akapora? Let us know with a comment in the comment section of this video. And while you're at it, go ahead and hit that bell notification so you all will become notified of whenever we upload these type of videos. Again, we do appreciate you all taking the time out and watching this newscast. Make sure you all maintain your profitability, and I will see you all later.